All right, Bulls and Bears, hope you're doing well. I am back with another dose. Let's go ahead and get right into it. The powers that be, the top 1%, the bankers, the politicians, they are in panic mode right now, trying to keep this economy from completely imploding. Are we talking about the stock market? No, of course not. The stock market, they can click of a mouse, inflate the stock market as high as they want to. We all should know that by now. What they're concerned about is the U.S. consumer getting pulled under this wheel of debt and high interest rates. But they're afraid to cut rates because of inflation. But yet, even with the inflation problem still being persistent, even though they're trying to convince us that inflation is cooling, or it came down last month 0.1% from the month before that. So we were told that this was a huge relief for the people, and now that we can, you know, uh, breathe a sigh of relief and maybe even start talking about cutting rates. And I said this was likely to happen, right? Take a look at some of the news here out recently here on this rate cut situation. Traders see the odds of a Fed rate cut by September at 100%. Folks, we're a couple weeks from August, so we could be talking about rate cuts in the next month or so here. Crazy, but true. Even though the housing bubble hasn't come undone or it hasn't deflated, asset prices across the board are still up at least 20 to 30%, many a lot more just since 2020. Most of you probably know that the cost of living hasn't come down very significantly. Here's another one. Wall Street Journal out there trying to convince you and everybody why the Fed should cut rates now and not wait until September. So, what kind of an emergency is there out there? We're going to talk about the jobs numbers here in a few minutes. That's a disaster. But what kind of an emergency does there have to be for the Wall Street Journal to say we need to cut rates now? Somebody's panicking. Accelerating inflation looks like a lesser risk than a weakening labor market. Remember that, because we're going to talk about that here in just a little bit. Here's another one. Bloomberg. Fed prepares for September rate cut as Powell shifts focus to jobs. Another one. Top Fed officials say they're closer to cutting interest rates. Folks, if everything was fine, why do we have all this news out there about how rate cuts are around the corner, how we need to cut rates right now? Thought the consumer was strong. The economy's been resilient, according to Jay Powell out there and his speechwriters. His speechwriters, when he's looking down at his lines when he's answering questions. Hey, Jay Powell, what about this? What about that? Here's my opinion. Let me read it to you. Insane, folks. Folks, brace for something big, because if this rate cut really doesn't get people out of financial turmoil, you're likely to see something massive to come in and cover this entire situation up. My guess, one of my guesses, I have a few guesses, but one of my guesses as what I would bet on would be, oh, look, the entire system came down, or there was a cyber attack and Russia did it. I'm guessing something like that is going to be maybe the headlines here in the next few months. But, maybe not. We'll have to see. Maybe the rate cuts will be enough to keep this economy from imploding, or to keep the consumer imploding. Remember, when I talk about the economy, I'm talking about the consumer, which is the backbone of the economy. And consumers have to keep on taking out more debt in order for the economy to look like it's growing. But when you look at some numbers here, it looks like the economy is not growing at all. Of course, they're going to tell you that spending is economic growth. That way, they can just have the banks keep out loaning out more money. Take a look at this here. Jobless numbers, the highest since August. So yes, the highest in almost a year. Jobless claims. Look at this number here. New data out of Department of Labor showed 243,000 initial jobless claims just in the week ending July 13th. Just in the week ending July 13th. Remember that. Just in the week ending July 13th. 1 week. Now, let's jump over to this other number. June jobs added out of the Department of Commerce. 206,000 jobs added for the entire month. And that's the month of June. Wait a minute. So we had jobless filings 243,000 for just 1 week, but yet the entire month of June, only 206,000 jobs added, folks. Do you see the numbers here? We have more jobs being lost in 1 week than we have being added in 1 month, folks. This is a disaster. Of course, they're not going to put these numbers together and put them out in one article for you. You have to dig around different articles, get different data points, different statistics here, and then summarize them, folks. That's what we try to do here, folks. Got some more news to get caught up on. Please make sure you subscribe if you like what we talk about here. If you like digging into not just the headlines, but in between the headlines, read between the lines, get into the cracks here, the financial crevices, all that good stuff here. Costco is helping people prepare for maybe something big, maybe even apocalyptic. Take a look at this. We've got Doomsday dinners. Costco selling Doomsday dinners, the apocalypse bucket. Is that really what they're calling it? The ReadyWise emergency food bucket comes stuffed with 150 servings of meals from pasta to Alfredo to apple cinnamon for basically $80. Lasts up to 25 years. This is funny though. Apocalyptic bucket. That can't really be the name of it here. Let me take a look here. Huh. Yeah. Apocalyptic dinner kit.
So I'm in Costco, which is like my happiest place in the world to be. And I've never seen anything like this before. They have buckets that they're just calling emergency food supply for 132 servings. And what is included in this bucket? I guess this is for when the apocalypse hits, which could be any time now, right? Who knows? We get teriyaki rice, a 6-serving pouch, pasta Alfredo, 6-serving pouch, cheesy macaroni, apple cinnamon cereal, tomato soup with pasta, creamy pasta and vegetables, brown sugar and maple multigrain cereal, all 6 servings for each. And then again, continuing on, barbecue beans, vanilla pudding, orange drink mix, whey milk alternative, Southwest rice and beans, and chicken flavored noodle soup. All up to 25-year shelf life, 132 servings, $63. So when the world collapses and caves in, as long as you have your ReadyWise emergency food supply, all's right with the world. I really want to sample this. Why don't they have this here for free samples?
Okay, so he's talking about a different one than the news headline was talking about, and that didn't say apocalypse on the bucket, so maybe that headline was a bit dramatic as far as calling it the apocalypse bucket here. That's what it said here. Let me just bring this up here. NBC, Doomsday Dinners, Apocalypse Bucket. Okay, so they got it in parentheses, right? So that's just what people are calling it. So there you go, 25 year, up to 25 years. Now, up to means at the most 25 years. So I wonder what the soonest it would go bad in. Let's say you're in a humid location there. Be interesting to see. So the $60-something one, I might pick up a couple of them actually this week. It'd be kind of a nice thing to know that you've got some emergency food put away there. All right, let's move on a little bit here. Got a couple other things I wanted to touch on today. This housing market, folks, the housing bubble. I think I might have been the only channel out here warning you that the housing bubble wasn't going to go bust. We know the powers that be out there, the top 1%ers, the puppet masters. We've heard directly from some of them saying that, you'll own nothing, right? And they want you to be content with that. They want you to be happy with that. So why wouldn't we believe what they're telling us when the people that control this entire economy, the money supply, are telling us that, right? Why wouldn't we believe them, right? And if prices do come down, let's say there's a crash, let's say we do have the attack that I mentioned earlier, that maybe Russia will do it or something like that. If that does happen, how many people are going to have the money and still have a job or the income to go buy a home if prices were to come down? And to me, that's a big if. I think it's going to be a pretty big black swan to bring this housing market down. It's going to have to cut off the supply of money. It's going to have to take the entire banking system down. But even then, all they have to do is put a freeze on foreclosures, and they can prevent home prices from coming down, because there won't be people desperate enough to put their home on the market if you put a freeze on foreclosures, right? When people are worried about losing their home, that's when they sell to try to get equity out of that home and sell it as soon as possible before prices fall down further. But when you have foreclosures freezing like 2020 foreclosure freeze, then there isn't that emergency need for homeowners to go ahead and put their homes on the market in mass, right? So we could see something like that where even if there is a black swan coming down, the underpinning under the housing market could possibly still keep home prices inflated, folks. There's so many things they can do to manipulate this. And if you didn't believe that before 2020, maybe you just started believing that in 2020. But I've always said here, there's complete manipulated, controlled economy. We have the controllers creating the money creation, or basically controlling the money creation, controlling rates, controlling which banks succeed, which banks fail, and even the banks that fail, customers don't lose their money because they just get bought out by a bigger bank. It's more consolidation than it is bank failing when you think about it, right? There's stuff in the news, about banks failing. Did they fail, or did they just get bought up by a bigger bank? Right? Is there just consolidation happening? To me, it just looks like consolidation. They don't want banks to actually fail, and they don't want depositors losing their money. That's why they printed all that money in 2023. They printed all that money, even for the billionaires that had way above what the FDIC was supposed to protect, above the 250,000, which was supposed to be the limit. They changed the rules at the last minute, and they came in and rescued everybody, even the multi-billionaires, because they didn't want the confidence to be lost. The last thing they want to do is have the billionaires panic and pull all their money out of the bank. That would be a bank run on an epic scale. And of course, they put a quash under that. They quashed that very quickly, as that could have spread. Contagion could have spread very rapidly if that would have been allowed to happen. All right, folks, let's talk about this here. Here's a chart, and this is national debt by year, and this divides it up between the lefties and the righties, right? We got the Democrats in the blue, Republicans in the red. This divides it up. Now, what I think is important here, you look back with this start, 1977, and we were just about $1 trillion, right? So let's just say since 1776 to 1976, 200 years. It took us 200 years to get our first $1 trillion in debt. But just in the past, say 40 something years or so, we are now, well, this only goes up to 31. It's really about 35. This was the nicest chart that I saw. They had the lefties versus the righties, right? So we could see the red, the blue, the red, the blue. It doesn't matter. It doesn't matter. Both parties just run up massive amounts of debt. And the party that's supposed to be conservative, you look here from 2000 to 2008, that was supposed to be the quote unquote conservatives. They weren't very conservative, were they? No, they ran up a lot of debt, more than the previous administration. And of course, the administration after that, more than that administration. The administration after that, from 2016 to 2020, about the same pace. Of course, we had that big spike in 2020 because of the whole health crisis. And, since then, we've got more deficit run up, more debt. So it doesn't matter, folks. And I want to come back to this, not just this chart, but just this premise here as often as possible, maybe once a week or so, just to kind of remind people this November, yeah, there's some differences between the two parties, but overall it's going to be more debt, more inflation. Both of the parties, they don't want the deflation situation to occur on their watch. If it does happen on their watch, there's going to be a scapegoat. There's going to be say, hey, look who did this. These bad people over here came in and they crashed the markets. They did this bad thing. Pick your black swan. Let me know what you think down in the comments. What's your black swan pick? And folks, so I just want you to be not so full of hopium that you think that really somebody's going to come in and save you. I think you need to be on top of the news, be prepared, be ready for things to get worse. Have the Doomsday bucket. What's it called? The apocalypse bucket from Costco. I'm not saying it's going to get that bad, but if we see the entire system come down, like I think there's a big risk for that. We still have World War III knocking on the door, at least walking up the sidewalk, approaching the door. What do you think about that? I mean, I think the risks are very, very elevated right now, right? Let's stay on top of this. What do you think about the jobs numbers? Losing 4 times as many jobs as we're gaining. We've got talks of rate cuts need to be happening now. Why would they be talking about that, folks, if everything was fine, if the consumer was really strong? What do you think about this, folks? Let me know what you think down in comments. Until next time, keep stacking. We'll see everybody very soon. Bye for now. Peace.